Good morning, everybody. Hey, welcome to Thursday, September 17th. I hope your week's going well as we finish up. Yesterday, we had the Fed report. We'll talk about that today and what that's going to mean to your 401k and those type of things as we prepare for the end of this quarter, which is not really too far away if you think about it. I mean, we are over halfway through September, which means we're almost to the end of the quarter. So, hey, I'm looking forward to my conversation with Dave with all the Fed news and looking at the unemployment numbers, and that's coming up here next.
He's there at 104.7 FM. My name is Morning Dave. It's 8:40. That's 20 before 9, and that's the time we check in and find out what Wall Street's doing to your retirement fund this morning. Yesterday was, okay, green ink on at least one of the major indexes. See if we can see some recovery after the Federal Reserve messed with us yesterday. Downtown Sebring we go to the offices of Statler Financial Services, where Phillip Statler is standing by. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well today. It's hard to believe it's already Thursday, man.
Oh, Lord, yeah, the week has gone by a little bit too fast for my taste. Start out setting the table yesterday. Like I said, the Dow eked out a little bit of a gain yesterday. NASDAQ was off by 1.25%. Standard & Poor's was off by almost 0.5%. And a lot of those losses came right about the time that Chairman Jay Powell opened his yap at the press conference after the Federal Reserve Open Market Committee meeting. They said, number one, we're not changing interest rates. Number two, we're not going to change them probably until 2023, and that was something you and I talked about yesterday. I'm not sure I wanted to hear anybody say that. And he pretty well put the onus directly on Congress that if there's going to be any more stimulus for the economy, it's going to be on the fiscal policy side of the fence, and that's Congress's job. And pretty much you got a good idea what happens when you give Congress a job to do. Restrooms are a lot more efficient than Congress is, right?
It definitely seems that way lately, Dave. I mean, you're right. And I know you didn't want Powell to confirm what I'd heard already, but, that's the way it is. And so it does seem like they plan on keeping interest rates low until 2023, which is so hard for me to believe and you to believe, because that's just a long time out there to keep interest rates so low and advertise it, right? Hey, we plan on keeping them low until 2023.
I mean, we've had abnormally low interest rates. In fairness, we've had abnormally low interest rates since 2009, but it's the statement that had me concerned, because that basically telegraphs to the markets and the economy that the Federal Reserve expects things to really suck for at least another 2 years.
Well, but here's the other thing that I find interesting in that announcement, from a business perspective. I think that by telecasting that, it does give some certainty in the area of interest rates to business owners and to businesses. It will allow them to kind of look out and do some planning based on what they can do and how interest rates may be able to help them get through this tough patch.
And the other side of the fence, while we're talking both sides of the coin, it also ends up giving us a little bit more certainty and a little less case of the willies over all the money that we're spending on the federal government side, because what the Fed does for interest rates indirectly drives what happens to federal bond rates. And you and I were talking about it when things were going up for a few months in there. About the last thing in the world we need is, with trillions of dollars of federal debt, to see those bond turnovers turning into 3% and 4% bonds.
That's right. That would play havoc on the federal budget, because that would raise the interest payments that we have to make, which then in turns means that money's got to come from somewhere. It's going to come from you and me in the form of tax dollars.
Absolutely. So, yeah, there's two sides to every coin. My concern is telegraphing the expectation that the economy is going to stink. That having been said, your point well taken that, at the very least, some certainty and knowing that we're not planning on doing anything precipitous anytime soon, that does make a difference in terms of planning and in terms of stability. So it may end up being a wash at the end of it all.
Yeah, I mean, my only concern obviously there's concerns about the economy, but inflation, interest rates staying so low for so long, inflation still in the back of my mind is a concern.
Now, yeah, we're going to be talking about the better part of 16 years before we even consider getting up to a semi-normal set of benchmark market interest rates. And it's going to be interesting. I mean, inflation could happen, and in which case, then Jerome Powell's going to end up changing his tune, and that's going to end up causing us more upset stomachs.
Oh, yeah, definitely. If he changes his tune midstream, yes, that's going to upset some folks.
No, without a doubt. Federal government data dump this morning. The usual Thursday numbers came out. Unemployment claims, some good news, some bad news. The first-time claims down by about 30,000 from last week, which was good news. It's just a little bit not as good as they were expecting it to be, I gather.
It depends on whose numbers you're looking at, right, Dave? You and I were discussing that beforehand. If you look at CNBC's numbers and whoever they poll, it was better than expected, right? They came in at an 860. I think CNBC expected 875. My guys and the guys I follow and the guys you follow expected it to be somewhere around 855, 852, and it came in at 860. So that would have been a slight miss. So, I mean, I think we're within that realm of, hey, it's pretty much an even deal. Came in relatively close to expectations. So I don't think that's playing a big role, but continuing claims, though, that you and I have been watching, that's another issue. They really dropped this last week by almost 1 million. And that's a nice indication that I really wasn't expecting.
Absolutely. It was about 500,000 better than the market expected and down by the better part of 1 million. And that was one of the concerns you and I were expressing last week, that as we look at the unemployment rate, we need to start looking at what we were describing as the U6 rate, the total unemployment rate, how many people are getting discouraged, and it's becoming a structural unemployment problem. When we actually overachieve on that number, I'd call that undisputable good economic news.
It was. I think that was a good news, a good number. I got to tell you, Dave, the futures disagree with us, though.
They have a tendency to at times. They might be looking at some of the construction numbers because we didn't get some good news off of that. Building permits came in at an annualized 1.47 million rate. That was not quite as good as was expected, but the really kicker on the thing is it's a 1% decline from last month, and that we don't want to see.
Yeah, you're right. It missed expectations by not quite 10,000 or so expected. They expected 1.55. It came out 1.47. Yeah, it is a miss, but you're right. The big thing there is how much it declined from last month. But even more important than that is housing starts. Where they're getting them out of the ground and starting them. And those were a miss also. Not much in terms of the actual number that was expected. I mean, it came in at like 1.42 million. They expected 1.47 million. But again, month over month, it was down 5% from last month. So that to me was not a good sign.
Not what we want to see. It's more like you said, not the magnitude of the miss, but the fact that it was going the complete wrong direction from what we want to see.
Yeah, exactly. So we'll have to continue. Obviously, 1 month doesn't make or break a number, but it definitely is something of to keep an eye on for next month.
And it certainly doesn't help the guys that are throwing a lot of money around on short-term bases looking at what our futures are looking at this morning either. As mentioned, it was a mixed bag yesterday, off on the NASDAQ, off on the S&P, barely positive on the Dow. And like I said, a lot of the movement came right after Jerome Powell's press conference from the Federal Reserve meeting. 45 minutes before we open this morning, can we reverse that trend even the slightest little bit, Phillip?
No, we're going to just keep piling on today, Dave. It's going to be a red day. I hope for a reversal, but I'm not seeing it in the cards right this minute. We've got the Dow down 313 points. That's a little over 1.1%. We got the S&P 500 getting down close to $50, down almost 1.5%. And then we got the NASDAQ down almost 250 points, which is 2.2%. Significant downturn there. As we look at that number. And if we turn and look at the commodities side, they're going the same, everything's going the same way. We got the silver down almost 2% this morning to not quite $27 an ounce, and we've got gold down 1%. And then crude oil, must have closed over 40 last night because it's down 0.7%, and that put it at $39.80 a barrel right now.
At least a little bit better than it was yesterday at this time, but still not as high as it needs to be. I'm noticing a flight to safety, too. All of the bond rates are going down by 2 or 3 basis points, even as I'm watching them go as well. So we got a pretty good idea where the money's going.
Yeah, I think it is today. People are taking some money off the table, and I think that probably started yesterday afternoon.
Yeah, it might very well be a park it and see what happens move for the big money guys for today. World markets pretty much responded to our futures and our reaction to the Federal Reserve yesterday. Asian rim markets were down, Hong Kong considerably, down by almost 2%. European markets are off fractionally this morning, not as bad as Asia was at the close, 45 minutes before our trading day begins and halfway through theirs. Phillip, this is one of those times where stability counts for a lot, and I know I've got more risk in my retirement portfolio than you recommend. How do I find out where that risk is and get a hold of you?
Hey, that's what we developed, our financial x-ray. Give us a call to schedule your financial x-ray, 863-382-0037. Follow us on Facebook, Statler Financial Services. Like our page there. If you miss us in the morning, you can catch us later in the day. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
Where we stream it, by the way, too, at Highlands at newstalk730am.com, just like we do this one every morning here, as well as your YouTube videos. Phillip, thank you so much. We'll catch you tomorrow morning, all right?
All right, man. You have a great day, and I will talk to you in the morning.
Catch you then, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, I want you to know I really appreciate you hanging in there with us and tuning in every day, whether it's on the video or actually listening to us on the radio. I appreciate it. Remember, we're here for you. If you have questions about your 401k, your IRA, any investment decisions, even college planning, any of those type of things that we can be of assistance to you, that's what we're here for. We're here to be a source for our community. Give me a call at 863-382-0037. Have a great day. I look forward to speaking to you tomorrow as we finish out this week.